Hi, this is Linda Welsh from Linda Welsh Realty Group at Compass. And thank you for joining me today. We're getting a lot of innovative responses to how we can boost the economy and home buying for people who have had a difficult time because of rising prices. And so some of the things that have been done more recently have been assumable mortgages, although there are fewer and fewer of those available. And you do need to qualify for them and probably have a big down payment because, again, it's to assume a mortgage, you're only assuming that portion that is available on the pre-existing loan. So that is one thing that has been happening, and that is good for federally backed loans, FHA loans, and VA loans. You don't have to be a veteran to apply for those. But some of the newer things that people are talking about are a proposed 50-year mortgage, which the current administration is talking about, which would lower the payments over time, and also a portable mortgage. If you've heard anything about portable mortgages, this is quite an interesting concept. So let's go back a minute and talk about the 50-year mortgages. Currently, most mortgages are 30-year mortgages, and some are 15. We can talk about as well how you can change your 30-year mortgage into a 15-year mortgage without refinancing. Basically, if you wanted to do that, let's say that your earning years are not that many. Maybe you've got 10 more years that you're earning and you really want to get your mortgage paid down. What you can do is each month, if you can afford it, when you make your payment, take a look at what the principal part of your PITI is. Your principal and interest usually comes along with your taxes and your insurance. Well, your tax and your insurance every year is going to be pretty steady. Your interest is also going to be steady, but your principal will, over time, your principal will get greater and your interest will get smaller, but it will be a very slow graduation. If you took an extra payment for your principal only and you designated it as such, you might be able to pay off that 30-year mortgage in 15 years. Or if you have 20 years left, maybe pay it off in 10 years. So take a good look at that and see if that's something that would fit your budget if you're planning on staying in your home. The other thing that they're talking about is a 50-year mortgage. So with a 50-year mortgage, everybody would have a little bit lower payment, but keep in mind you're going to be paying a lot more interest over time. But if that's what you need to do to get into the home that you want or to be able to buy a home at all, then you may want to do that, because after all, being a homeowner is the biggest and best thing that you can do to gain wealth in your lifetime. So if you were to get a 50-year mortgage, even though over time you might be paying more in interest, you could always pay that off if and when you're able to pay more principal, just as we talked about with the 30-year mortgage going to 15, and it might help you to qualify. Now, keep in mind that if this becomes the norm or it becomes very popular, a lot of people might jump into the market at one time. You might find a lot of first-time home buyers, which means that people are going to be competing for the same properties. And when we have more people compete for the same properties, you're going to find that prices will probably go up. So it's always the law of demand, and as long as there's a demand, then prices will probably increase. So keep that in mind. Whether or not you choose to do it probably won't have a big effect, but if it becomes commonplace, then over time, the law of supply and demand will tell us that probably prices will go up. Now let's talk about portable mortgages. What this means is that if you own a home, for instance, I have a 4.3% interest rate mortgage, which is not the lowest. We've seen some as low as mid twos, but it's a good rate compared to today's rates. And if we wanted to use that portable mortgage, and if it was approved, to actually move that mortgage to a new property. So this is a very unique concept and something that I've never seen before, and I don't know anybody who has, but I love the idea of it because it means then that people will move in accordance with their needs, because right now a lot of people are staying put just because of their interest rate, and it's causing a little bit of stagnation in the market. We're seeing the market slow down because especially people in the older age groups are going to stay in their homes, even if their home is too big for them or they've outgrown it, because they've got a great interest rate. So having a portable mortgage, I think, could be a really great idea. I'd love to see that happen in 2026. So again, this is Linda Welsh from Linda Welsh Realty Group, and I would love to help you with any questions that you have. And if you do have a question about mortgages or mortgage rates, we have a very short vetted list of fabulous lenders that we can put you in touch with. And if we can help you with a purchase or sale in the coming year, we would love to do that. Give us a call. Bye.